In this video, we are analyzing Google stock by the ticker symbol GOOG, and we are looking at a stock which is down by 5.5% in the past month and by a whopping 10% from its 52-week high. Now, looking at Google stock, we realize that it is a stock that dominates digital advertising, controls roughly 28% of global ad spending. Its cloud and AI divisions are expanding rapidly, and YouTube remains a major cash cow and shorts driving massive engagement. Meanwhile, Google's search monopoly holding 90% of global search traffic ensures that its advertising business stays strong and profitable. With this, we now have a basic understanding of what Google's business models look like. Now we can take a look at key stats of Google stock. So we drive upon what is the PE, which is at 23.23 right now, and the forward PE is lower at 18.3, which signals bullish signs. The PEG is not so ideal, but at 1.71 it is below 2, but for a Mag 7 company like Google, it is fine. The P2B is considerably high at 7, and the quick ratio and current ratio stand at $1.84, which basically mean that for every dollar of debt that Google has, it has $1.84 to pay it off, which signal that this company is not going anywhere and it is not obviously going to get bankrupt. The debt to equity is very good and it is at 0.09. So with this, we now can move on to the EPS, which is in this year has grown by 10%, and for the next year it is expected to grow by 14.5%. So all these signal bullish signs. Looking at Google's price, it is at $186 per share right now, which is very close to its lower Bollinger Band, and this signals that an upward momentum can be witnessed with this stock. Now we can answer the question that is it a buy right now? So well, yes, it is a buy right now at the current price. But if you are someone who is a more conservative investor and wants to invest into Google for the longer haul, then you might want to split your cash into two and invest 50% right now at this current price, and then you might want it to drop to like $180 where you can invest with the rest of your cash. So if that sounds right to you, then you might do that. But for somebody like me who is a little more aggressive and believing in the business models and growth of AI and Google, I might want to invest at the current price levels as well. I've been trading in Google for like the past month and I have made a good amount of money by short-term ups and downs. But if you are someone who is looking at Google in a long-term or on a long-term basis, then you might want to enter it at the current price and you can hold it until $210, which is a little higher than its 52-week high. But looking at why the price has dropped, then the single main reason is that it has dropped due to a little bad forecast in its earnings for the next quarter. So that is just a temporary error and it will obviously get corrected by the market. The price will obviously rise because we already have talked about the business model and we know that Google is not going to go anywhere. So let's just draw a little line at this price of $210 where you might want to exit if you have invested right now. So currently Google will offer you about a 10% of an upside, I guess. If you invest right now, you will witness a 10% upside, maybe 11 to 12% of an upside if you enter right now and sell at $210 or roughly at the upper Bollinger Band. And with this, I have now answered the question that is Google a buy or not. So I hope you enjoyed this video and got something valuable out of it. So this is Lazy Investing, turning insights into income. See you in the next one.